Like what you're doing right now. What you're doing right now.
Hey traders, I'm gonna get started in a few minutes. Just got a bunch going on today. Everything's whipping around.
That's like how it
Bitcoin falls the lowest prices in 1 month. Well, better panic. That's a good headline. It's funny. Guys, I'm just letting a few more people log on before I get going. We're going to cover cycles. I'm going to give you some behind the scenes look at what I share with my students and the new traders when we start to learn the model and the process. I call it the origins of the model. It's understanding some of the physics and the cyclical components of trading, understanding the fourth dimension. But just I'm going to give it a few more minutes here. I was late getting in the room. Some of my guys are still trading too, so. I was going to put some music on, but I can't. If I play it through the computer, then there's an echo through the YouTube, so I got to figure out how to do that. And it's starting to rain hard here. Okay. I'm just putting together, bringing up some of the results from some of my new traders here. Share that with you guys. What else? That slides up. All right. Start in 1 minute. Hopefully this weather is not too annoying in the background. I'm in South Florida, for those of you that don't know, so it's kind of the rainy season here. Gets hot and humid like a wash machine, and then the sky just falls down. Okay. Can you guys hear me okay? For those on Zoom and then YouTube land, put a Y for yes. Okay. All right. Okay, guys. Yeah, so today we're going to go over just a brief overview of cycles and how we apply it to really any market. What's great about our model is it doesn't really matter what style of trader you are. If you're day trade, swing trade, long-term core, institutional, pension fund manager, it's all the same model. So you can apply it to different indexes. You can apply it to entire markets, or you could trade something as, esoteric as mutton futures if you want. There was different things on Bloomberg that we used to play around with on the model. But real quick, my background is I was a institutional bond guy, fixed income trader. I ran a rates desk and traded U.S. cash treasuries. What kind of the model that we built, I was a directional guy, so I would call on all the big banks. I covered all the primary dealers, hedge funds, buy-side money managers. I mean, I talked to guys in Kansas that ran a little financial advisory business out of, a small office in the Midwest, or I'd talk to the head of the desk at HSBC. So again, what's great about the model is it pertains to a lot of different markets, and it's useful in a lot of different ways. So we traded real size, though. I mean, I would trade with the swaps trader. I mean, days where I'd be on the bid for 200 million. I was the entire bid in the 10-year market at that time, lots of times throughout the day. And that's a pretty deep market. So I know what and I have the experience, taking real risk. Used to have Goldman and RBS work my orders overnight. And so we would take risk for the firm. I would take risk, firm capital, my capital, and then I'd also work orders and cover other traders. So some guys would be out of Chicago. We'd day trade the 10-year. Some people were longer term, trading the yield curve out 3 months. But that's the background of what we do and what I teach. And then recently we've taken those same concepts and applied them to the crypto digital currency space. So like here, for instance, today, I mean, we just signaled short oil up here. we were trading about 3 different Forex pairs this morning. But that's not really what I want to go over today. I want to kind of just jump right into cycles and time and how it applies to the crypto space. So let's see. All right. So when you join my full access team or my prop program that we're going to be rolling out soon, we cover a lot of this in depth, and there's about 10 hours of video. So this is some of the behind the scenes. But so, you know, my I guess half of my life's work has been around trading, trying to figure out what works and what doesn't work. And a lot of, obviously, any of you that have traded for any period of time, you know that the process of trying to figure out what works and what doesn't is you end up losing money. I mean, I've gone through a couple accounts. I've probably made every trading mistake you can make. And it's a long road. I mean, there's a lot of ups and downs if you go that path. But what I try to do is shorten that learning curve for everyone, and that's why I started the firm. So I think you can be a consistent trader in what takes some traders never really achieve it. They usually quit. I think it's 8 years to 6 years, unless you go a professional route. If you really catch on well, or you just have a knack for it, it's probably 4 years. But what we do and the consistency and the way I teach the model, I mean, we're getting some serious results from people that are completely new to trading within 3 to 6 months. And I'll show you guys some of the consistency that we have. But the reason that we are so consistent is because I've kind of peeled back the main concepts that will help you in trading. So I break it down into different levels. There's fundamental analysis, which is very old school. I'm not a big fan of it. Okay, technical analysis, which everybody pretty much understands. Back in the 80s, nobody was a technician. You could make a lot of money if you were drawing out charts or you had a charting service. And then there's cyclical analysis, which I think is where the next innovative realm of analysis is going to move towards. You got to have this understanding of time. So I think I was one of the first to really get this and really teach on it. And embedded in the cyclical concepts, you also have to understand physics. So we've taken a lot of energy concepts. But this idea of cycles, guys, it's just the way energy moves. It just happens to be the physical realm that we live in, and this dimension is everything is cyclical. So, I mean, we could get into the cycles of, you know, planetary cycles to war cycles. There's obviously agriculture cycles. Life itself is a cycle. And I think everyone pretty much understands that, but I think nobody's really, not a lot of work's been done on in the financial markets. I don't want to get into the Keynesian stuff on the business cycle, but everything moves in waves, guys. It's all energy flow. So yes, there's greed. Yes, there's fear in the markets, but it's also just like energy passes through water. It does that in a wave formation. That's how the energy travels. The energy is moving through players in the markets in a very similar fashion. That's why the same patterns repeat on the 1 minute as they do on the hourly or the daily or the weekly. All right, so there's a volatility wave that overlaps that's kind of intertwined. We take a look at volatility a lot in our model. But these are kind of the true forces that exist. And then once you understand that, we've built our process around understanding certain points we have a pi line, we have what we call our wave formation bands, and it helps us identify the trend, and then it helps us, more importantly, get the timing right. And that's just how markets move. I mean, you always have to have the majority of people wrong. That's just the energy that swings the price action back and forth. But you'll see here in a minute when we get back to the charts that we use a slow stochastic indicator, and I like to use it as a pendulum. And I think of it as a metronome of, it's like a rhythm of time. We don't use it for overbought and oversold. We want to constantly think about the time component, just like a pendulum swings. This is some work I did on cycles. I don't know if I want to get into that, the business cycle. Well, I guess I should just real briefly. So the business cycle is 8.6 years. It was discovered by really Princeton economics. And the 8.6 wave builds into a 56.2 year wave. And so these cycles play out and they build in intensity. And what you had in 1981 was the high in interest rates. All right, that's when the last big public wave was. And you have these shifts, these big picture confidence shifts between the public sector and the private sector. And part of the reason why I'm so excited about crypto is because we're moving into another private wave, similar to what we saw in 1929 when you had the roaring 2000s. That was the peak in a private wave. So you had one of the best stock market bull runs in history of financial markets, with the roaring 20s, the Gatsby's, all that whole time frame was just massive innovation. That was a huge private wave. Now we've been on this build up in public confidence, which has really started to unravel since 2015 with all the populist movements going on, separatist movements going around the world. There really is a huge shift away from the public sector. I just had one of my guys, I don't know if any of you guys saw this, put a graphic up today. Let me see if I can switch over real quick. In our crypto team room of, I didn't see this, but somebody was holding up a buy Bitcoin sign on, look at this, guys, on right behind Janet. I think this was today. I don't know. But this, I don't know if you guys can see this. This is a perfect example of the shift away from central planning, collapse in the confidence of government. I mean, you can see it from Greece to Cyprus. It's just the tip of the iceberg. I mean, once these central banks blow up, there's going to be a huge shift away from those public assets, away from sovereign bonds, and the digital currency space is going to be a huge benefactor to that. So anyway, there's these swings in confidence that's all cyclical. I think we're going to see I think the digital space, digital currencies, crypto space is going to be a huge part of that into 2032. I really do. And so, so with the business cycle being 8.6 years, this is kind of how the wave formation looks, but you can catch these different turns in the marketplace. Because when you study cycles, it's not about highs and lows necessarily. It's about turning points in time. So sometimes a particular market will bottom with the top of a cycle, while another market is topping out with the top of the cycle. Or you can have a market topping out with the bottom of a cycle. And we have examples of this. I mean, this is just a chart I did on the Dow going back. This is for the 1929 run up, but it's just amazing, guys. This plays out over and over again in different markets. But we actually had a peak exactly to the month of the business cycle back in 1929. This was the top here. The move actually started here in April 1925. You can see that the market broke out here. I did this on Bloomberg several years back on the Treasury desk. And so sometimes you'll get price that'll start a move and then go on a bull run all the way into the top of the cycle, which you had here. Sometimes you'll have a high with this is a minor turning point in time here. This is another minor turning point. But you'll see here, once we peaked with the cycle, I mean, it was in a downtrend basically for a full 4 years until the next bull market started at the bottom of this business cycle. And then you'll see it ran up. This is just amazing. And it peaked almost exactly. It did, April 1937 with the bottom of the cycle here. And I have all these dates. These are specific. This is a fixed date time. It's 8.6 years across. These are 2.3 years down and 1.7, I think, up. But anyway, I have a whole table if anybody's interested in it. Anyway, you guys get the point. Another cycle low here. Market rallied into the high. Here you peaked before the cycle peak, but did a pretty good job. And then you had the breakout right on the low here in 1951, and then the market exploded. The 50s and the rally in the 50s and 60s was just massive. So anyway, this is an example of the business cycle, even playing over a macro viewpoint. So when you understand the cycle is 8.6 years, what's is interesting is that the 8.6 year frequency is actually a derivative of pi. So when you take 8.6 years, guys, that's actually 3,141 days. So it's pi, right? Pi 3.14, you multiply that by 1,000. And the more you dive into this stuff, the more mathematical and cyclical, things like Fibonacci, all that stuff, it's all tied together. But the more you dive into this, the more interesting the derivatives of pi become. And so we use that on the chart. I'll show you guys in a second. And then there's other derivatives of it. I mean, 13, divide that into 8, that results in the 0.615384 calculation. This is another good one. I said that it builds into waves of 52 years. That's because it's part of a derivative here as well. 26 is another number that comes up a lot. But so not only that, and you look at the longer term things in science, but 8.6 years is pi times 1,000 days. That's, if you merge that 8.6 times 3, that's 25.8. Well, the precession of the equinox is exactly 25,800 days. So there's a hidden order and design of the universe, and it starts to kind of reveal itself when you start to understand time. So here we use, again, sine and cosine. These are very similar to the way the charts play out and the trends play out. And in here, you even have, it's a derivative of pi. I mean, sine and cosine functions repeat with 2 pi. And so you guys get the point. So that's what we really focus on at JRM, is understanding that. And then we get into fractals. All this stuff you can learn if you're interested in becoming part of our, what I call my full access team, or joining the prop team. You get the same training. But let's just go back to the charts here. I'll show you some examples of this. Let me see if you guys have questions. It's hard for me to do both. If you guys do have questions, you can put it in the chat and I'll try to get over to them. All right, so I was playing around with these charts a little bit today. I got the bands on here. This is something we call our wave formation bands. And it's a good visual for the trend. That's why I kind of use it. But again, energy moves in waveform. So everything really, everything in the physical world is, this metaphysical world is wave formation, vibration. You know, even the desk is vibrating on a, you know, on a very micro level, everything is vibrating. So it's wave formation. And that plays out in the markets too. So anyway, we were talking about Ethereum a little bit earlier on the team, and we were talking about this area down here, 150 to 160, if we don't really hold on to 200, and I think that's a very logical place right here. When we look underneath on the next layer down, go to like a 4-hour chart. This green line here, right here, this represents what I call my pi line. So this was a simple discovery I made, but I started playing around with concepts of pi, and then I wanted a moving average that was longer than 200. And so all right, why don't we try pi times 100? You put a 314 period moving average in here, and it's amazing how well price action reacts around it. And to me, it was silly to think that it's just a moving average. That's why it's doing that, because nobody has this moving average on their chart. I mean, all my years of trading, I never heard it. All my years on the desk, nobody uses a moving average out past 200 periods. So it's not a self-fulfilling thing. There had to be more to it. And the reason why it works so well is because it's not just measuring the price action and taking an average. It's incorporating the timepiece. So there's a certain amount of time, guys, for price to cycle from here, away from this average, cycle back to it, cycle away from it, cycle back to it, cycle away from it, cycle back to it. But this is a certain amount of time that's gone by, and that's why it works so well, is because it's capturing that cyclical 314 count, whether it's 3,140 days or 3.14. It's just, it has that rhythm of time in there that it's measuring. We can drill down to the smaller time frames. There's lots of different examples of, and so we don't use, this is just one example of our cycle stuff, but we don't just use this moving average as buy or sell anytime it hits it. I teach my traders how to work their positions around that. You know, when we have a trend change and we're away from pi, we know what the odds are. That we know the probability is you're going to cycle back to it. All right. So here's an example. I'm just pulling this up. This is the 1 hour on Ethereum. This was back in June. You were all the way down here at the lows, bottomed, cycled all the way back to pi. So my traders know in the model, when we break what we call our TMS, which is our proprietary trend following, we know that we have a high probability of going and completing a pi cycle. I'll show you guys examples on like Bitcoin here. I guarantee you nobody has a pi line on their chart that's looking at Bitcoin unless you're on my team and I taught you. And look how well this works. This is just one concept. Okay, this is a 4 hour again. All right, held exactly to the low on, what was that, guys? June 15th. Yeah, this held it exactly. Boom, comes back up. What does it do here? I don't know why this thing keeps jumping like that. Held it here. It actually held it twice there. There's 4 lows there. First time up, bounce, back down, bounce, back down, bounce. And then held it again a week later, and then held it again here. All right. Now we're coming into this time frame where it's going to be interesting to see if pi really rolls over here or not. It's still rising, which to me is still bullish. But I'm just showing you guys examples. This is examples of our pi line. And what else? This down here, a lot of people use the stochastic as overbought and oversold. But I teach my guys and gals, it's more about understanding the time, the rhythm of time. There's a pendulum that's just swinging here. And so when you start to see this rhythm, it's much easier to time your trades. You want to be buying the bottom of the cycle, and you want to be taking profits at the top of the cycle. All right? There's a rhythm here. Bottom of the cycle, boom. And a lot of times you can get a high at the bottom of the cycle. Again, this is a rhythm. You know? I mean, you can see it once you start to really pay attention and understand that this stuff exists. So what a lot of people do is they want to chase price, and they're on the wrong side of the cycle. Because time, guys, time matters more than price. Your timing matters more, and the cycle will typically dominate the price action. So a lot of people want to chase highs, but they're nowhere to be found at the bottoms of the cycle. I think you guys kind of see the point. So that's kind of what we do. I mean, we do this whether we're trading Forex or futures or bonds. But now we've just literally, I think this is our 3rd week that we started the crypto program. And I'll give you guys some details about that. So again, if you go to jenkinsrm.com and you come here under services, crypto coin team. And, you know, I'm working on a whole slide deck that gets into why I think crypto is just a baby relative to the move it's already had, and what the potential it could not only disrupt, but the amount of market share it could grab in the overall, you know, the overall currency markets, and how deep this just has a fraction of what the potential could be. So we're going to be trading these markets for a long time coming. The kind of the vision I had with this crypto team was, well, you know, there's a lot of people that, one, don't know how to trade it. So it's a learning process. But 2, if you're not a professional trader, you don't know what you're doing, you never traded a market before, you can't be, I mean, I see these advertisements for put your IRA into Bitcoin. I mean, that's just probably the most risky thing you could do. If you have any kind of serious retirement, you don't want to be doing that. But I thought for a great way to get somebody who's new to these markets or new to trading is start smaller and pool your money. So it's basically an investment club. There's a membership fee that includes our real-time alerts on several different cryptocurrencies, right, across the whole space, buy and sell alerts just like we do in the other markets. But then at the same time, we're building longer term portfolios, and we're going to be trading these markets around. So you get to trade the currency markets alongside my model. And there's other exciting things we want to do. We want to start participating maybe in some ICOs. You know, I'm trying to trying to decide if there's a couple other ways to put together some different fund structures to get involved, maybe in mining or again the ICOs. But this is where you go. Interested in our program? Maybe price on here. There's some Q&A if you have questions about it down here. But it's $1,000 guy to join. $1,000 to join. 500 of that is a membership fee, and then 500 is your initial seed investment. So you look at that like, I look at it like you get a, you had to buy a seat at the Chicago Board of Trade if you wanted to trade down there in the pits. All right. At one point, those seats were $1 million just to get down there on the floor. So for $500, you're in the game, kind of reserving a seat with us. And then it's a learning process. We do it together. We collaborate. We have weekly meetings. Oh, and then we have, I don't even know if we have a landing page for this yet, but we're going to have an affiliate program, which right here. So this is cool, guys. So anybody, if it happens to come up in conversation or if you're really good on Twitter or you really want to push this program, if you join and you kind of believe in it and you like what we do, for anyone that you refer, we'll give you guys 40% of that of the fees. So of the 500, and that's every year. So if you go refer 20 people, and a year from now they all sign up, that's a great way to add extra capital into your trading base for your. You can start trading with us for $500,000. Go refer 10 people and have an extra $4,000 to trade with. So anyways, I'll have more details on that, or you can reach out and ask us about that. Trying to think. I've been on since about 8 with my guys teaching and trading, so kind of talked out. You guys have any questions on yeah, we trade cryptos daily. Yep. When I hear daily, I'm trading, we're day trading in and out of positions that we close daily. We're not really day trading per se, the digital space, just because I don't think those markets are there yet. It's a little bit slower to execute, but we're putting positions on every day. We started a new position on Monero today. We picked up Dash yesterday. We have positions on Ant shares. I'll give you guys here. So this is just, again, we're just starting this, but these are the different positions that we're already building. And we're doing this as a team, guys. This is for anyone that wants to grow, learn about this marketplace. But I plan on trading this for the next 10, 15 years. So I'm excited about it. Anybody that wants, it's just more of a team environment. I've built on the Forex side. It's a team thing. It's not just about me or being a fund manager, and But yeah, it looks like double bottom down here. I think this market's just quietly basing. It's quietly basing, and then we're gonna have another leg up. I'd like for it to pull back. I'd like to really load up back here towards 1,500, 1,300, 1,400. I don't think we're gonna get it though. I think we're gonna go sideways here, catch another leg up. Anyway, guys, if nobody else has any questions. Look, I look forward to seeing some of you in the room here, chat room. That's the best way to kind of hook up with me if you have questions about our full access program or more questions on the crypto team. Or you're just new to trading in general, or you've been trading a long time. We still have an institutional business where I still talk to a lot of hedge funds and banks and things, and we're going to be spending some more time there also. So anyway, guys, hope I added some value. Play around with that pi line, 314 period moving average. If anything else here today, that's a pretty good technique. Play around with it. I think you'll be pretty surprised and amazed at how well it works. Yeah, you can add. Yep, you can add funds. We called it within the crypto team. The question is, can you add funds? And yeah, absolutely. So we're going to be coming out with, a nice landing page and resources to help if you guys want to refer on the affiliate side. So which is nice is that we have the program, we have the model. You have anybody that's interested in trading cryptos, all you got to do is you can use my videos, you can use the site, and we're gonna have a landing page. You can use all those resources and just point them in our direction, and then you'll have your own affiliate link. And but just try to make it easy for you guys to make some extra money by referring people in the program. I mean, it's growing really quick. Again, it's only our 3rd week. But part of that program is we're going to have what we call coin bags. So it's $500 for an extra coin bag. But essentially, that's just buying you extra shares into the fund. So similar to a mutual fund, have a net asset value that moves around. But you can purchase additional coin bags. If you're interested in that, we'll get you the info on that. So. All right, guys. Well, hope you got some good stuff out of that. I look forward to seeing some of you in the room. And for my traders, we'll be on early in the morning. And all right, guys, enjoy the rest of your trading day.